Ah, so we'll just push a button. Okay. Alright, thank you everyone for coming. Basically, I didn't know that how many people would be interested in this. I'm a little bit relieved because the meetup group had some 80 people were going to show up, and then I think I was getting really terrified because of the public speaking aspect of that. So this feels, a lot better. Okay, so basically, I kind of want to have this more as an open dialogue than a lecture, because a lecture on finance, which I started writing, can be quite dull. So if we can interact with it, and kind of get to some of your questions, figure out what you guys are, really need, that would probably be the best way to do this. So, okay, so let me introduce myself a little bit. Alright, so I have 8 years of experience in banking and finance. The most famous stint that I had was a personal MS for Stelios Adjumanu and the Easy Group. How many of you know what EasyJet is? EasyJet? Yeah, okay, so EasyJet, Easy Hotel, Easy Car, Easy Everything, Easy Bus, Easy Pizza, Easy Pizza. All these, and while I was there, we founded a number of companies. Founded a number of companies together. We founded the company Easy Gym, which is now operating in London. They're making a Little Frills gym where you can get for a low price and get gym membership for £10 a month or something like that. FastJet, which was a joint project between Easy Group and the Lawn Growth in Longred, which is now operating in 3 different countries in Africa. So it's like EasyJet, but in Africa. And we also founded Space Sports, or rather invested in it, which was an online children's video game. This is one of the companies that applied for investment with us, and they got invested through us. So while I was there, as the analyst, we received tons of proposals. Stelios is quite a high-profile businessman. And so we get tons and tons of proposals. And part of my job was to screen all these proposals to figure out which investments we're interested in and which ones we're unfortunately not. So. All right, anyway, so that leads to the first question, which is, I don't have an answer for this question. I have answers for some of the other questions, but this one's just to get things going. What are you guys afraid of when it comes to talking to investors? What are your big fears? No fears? Nobody has any fears? Projection. Okay. And, so you're afraid you send a letter and they'll say, this is a crap company, I don't like it, or something like that. Okay. Yeah. I don't have answers to this one, I'm just, so yeah, projection sucks, and, but anyone else, anything else there? Right now?
Are they more interested in ideas, investors, or the numbers?
Well, we'll talk about that next. Actually, that's coming up right now. So, so maybe I'll move on to that. But yeah, it's the idea of projection and maybe not being prepared enough for doing it or something like this. So, what do you guys think I was asked to screen for when looking at potential investments? Do you think, like what type of things? So like characteristics? Yeah.
I think first of all, if there's a need of a product or if somebody might want the
That's
product,
true. Yeah.
that's probably the big one.
Mm-hmm.
Is there a paying customer?
Yeah, this is also good. This is leading into, definitely. So.
Develop the idea.
Yeah. And this is definitely so. I'll just move on to this because you guys have covered it. Wait. Yeah. Okay. All right. So contracts or LOIs. You guys know what LOIs are? Letters of intent. They're like contracts, but they're not quite contracts. They're unenforceable by a court. I'm going to talk about them a little bit more later. They just show that there's some interest. So if you go to an investor with an idea, he's going to say, great, this is the greatest idea ever, but what do you have other than the idea? And if you have some contracts with suppliers, you have some letters of intent with people that are showing that you've got this business set up, you have potential clients, that the second you get the money from the investor, you can go in and make this product happen. That's the kind of thing that's really probably the most pivotal, most important aspect. Is you have some kind of contracts. The next thing was scalable model. So do you guys know what that means? Like a scalable model? Like, because I operate as a financial advisor, but it's not a scalable model because it's just me. So if I got 1,000 people that wanted to be my client tomorrow, I couldn't handle it, and there's no investor that's going to invest in my financial advisory because there's no scalability to it. So if you guys have, an idea, and you really have to double check it to make sure that you're not going to get in the way of your own idea, that you're not pivotal to this idea, and that you're not bottlenecking it somehow, and that the idea, if you got 1,000 clients tomorrow, 1,000,000 clients tomorrow, that you could scale up to that. Because that's what an investor is going to do. He's going to take your small business or just your idea, and he's going to use his contacts, he's going to push money into it, and he's going to make it grow as quickly as possible. And if it can't scale, then he's not going to invest in it. So, market research and financial projections and competitive analysis. This is all part of the same, thing together, which is market research. What do I mean by that? Well, let's say we wanted to go sell currywurst in Berlin. Well, we'd have to find out how many currywursts are sold in Berlin on an annual basis, and that's giving us an idea of what our market is. And we would look at the same time, we would be looking at the whole market, at the competition around, the competitive, the different currywurst vendors, how many there are, and you're figuring out, sort of painting a picture for the investor as to not only what the size of the market is, but what the competition is like. Do any of you guys think that there's no competition in the business that you're operating, whether you are? Okay, that's a really good thing, because there's always competition. And if there's no competition, then it means that you might have no market at all. So maybe because there's no market because it hasn't been developed yet, or maybe there's no market because nobody wants it. And so it's very scary for investors to invest in something that has completely untested market. So try to identify what your competitors are doing and who they are, and do the market research. And then this all sort of builds into the financial projections, which is going to be like the development, the number development of these market research. So there's 40,000 currywursts being sold every month in Berlin. You can get 5,000 of those a month. You can sell them for €2 plus €1. Now you start to have these financial projections that are making real numbers that can be eventually given to investors and let them know what the kind of profitability of this company would be. Okay, financing terms. Financing terms are basically the terms of the deal that's going to happen between you and the investors. And if you don't come up with them, the investor's going to come up with them, and who do you think they're going to be the best for? It's not going to be for you guys, it's going to be for them. And especially if you don't understand what the terms are. So if he's talking about some senior preferred note with this kind of convertibility, and you're like, yeah, sure, that sounds great, and then suddenly ends up with 70% of the company, and it's because you signed it because you didn't really know necessarily, what it meant. So this is important that you come up with these terms and you really understand them and you present them to investors. And then maybe we'll reject the terms at the beginning, but at least you have a basis of negotiation. So, okay. And then metrics. Oh, sorry.
One question. Are you going to give us handouts at the end, or should we take
this? This is all going to be this is all going to be online.
It's going to be online.
Yeah.
Oh,
so I'll give that. You can download it for free from there. Okay. And then the last thing is metrics, which are. Does anyone know what metrics are? Metrics in business.
Metrics. How do you measure your success, for example?
Yeah, exactly. And so like in the terms of the currywurst, it's very simple. It's like number of currywursts that you're selling, the cost of the currywurst, the price of the currywurst, those are all the metrics. Some of you might have more tech business ideas. So something like a typical internet business model would be like, okay, let's say it's an advertising business model. So people come to the site and you want them to click on the ads. You have traffic, number of hits per month or per day that you're getting. And then you have a conversion rate, which is like how many people come to your site and how many of them actually click on the ads. And then you have a pay per click. And so you multiply all these together and you get kind of an estimate of what the financial projection is going to be. So if it's like 2% of people are clicking on the ads, you get 100,000 people a day, it'd be awesome. You get 100,000 people per day, and it's a certain amount. It's all going to go into the financial projections, and it starts with these metrics. It's a little bit hard to see, but all these things, they kind of